in chat. If we have a conversation face to face, I'll know if you're being serious or you're just joking. So what do I mean by short? I don't mean we could. I think I was very clear in my explanation. Okay, I'll go back to my KuCoin chart where I have this diagram that I had from yesterday, right? Now, let me try and explain it again so that people understand, okay? Let me just get rid of these for a second. There is no derivatives. There are no perps. There are no derivatives for this. There's no futures product for this token. There's no shorting. No one can short. I'm not suggesting that you can. And that's my point. I'm just saying, if you could short, you would need an invalidation. And what is an invalidation? So look, there's only one way the price can move in the market. There's only one way. It's impossible for the price to move unless a market order is activated. A market order. What's a market order? A market order is when someone buys or sells at market price. So they want to fill a position, let's say for the sake of argument, 100,000 TRVL, and they want to fill the whole position at market price, whatever the price, just whatever the market price is, and just to fill it, because they want to fill their 100,000 TRVL and be gone. That's a market order. Yeah, you can market order sell, you can market order buy. So you just say, I want 100,000 TRVL, I don't care about the price. That's a market order. Those are people are called market takers. They take the orders from the market. And so the other way to place orders in the market are limit orders. Limit orders, you're saying, I want 100,000 TRVL, but I only want 100,000 TRVL at a certain price, and the price might be 3 cents. And so you'll have your limit order there on the order books, and you're called a maker, right? And your order could be sitting there for 5 years, 10 years, 2 days, as long as the price doesn't come down, and as long as people don't sell into your order with a market order, your order won't fill. All right? That's just how it works. I didn't make this up. I'm just telling you this is how it works. So you have on the market, you have market orders and you have limit orders. And the only way, and people don't know how the market moves, the only way for the price to move is with market orders. Only. It's impossible for the price to move if 100% of everyone place limit orders. Yeah, because you'll say I want it at 3.5 cents. I'll say I'm selling at 3 cents. And that's it. There's no movement. Yeah, there's no movement because you want a limit order at 3.5 cents. You want to sell at 3.5 cents. I want to buy at 3 cents. There's no movement. The only way the price moves is when somebody says, okay, I want to sell at market. I don't care about the price. I only want to fill my order. My order is 100,000 TRVL. And so naturally, the price will start filling 3.5 cents, at 3.4 cents, at 3.2 cents, until you fill the whole 100,000 TRVL. And if your order gets filled before my price gets reached, then I still don't get filled. I'm still there sitting in my order at 3 cents at 100,000 TRVL. But if there are no orders, then the price will keep on going down until your position is filled to 100,000 TRVLs. And if there are no orders between 3.5 cents and 3 cents, then all of my position will be filled by your market order. But you won't sell it at 3.5 cents. You'll be selling it to me at 3 cents. That's just how the market works. And then on the charts, you'll see the candles will form. You have a nice big red candle. And wherever it closes will be the close at the end of the day or the end of the candle period. And that will probably be where my order was filled and where your order was filled at 3 cents. That's how the market works, right? So the only way to move the price up are with market orders. It's the only way. So if everyone that I'm talking to now I've not told anyone to buy at market. Yeah, I've been telling people to buy at limit. Yeah, because I don't want the price to be moved up. I want people to be able to buy cheap prices. You know, I don't want to inflate the price for people. I want people to get involved at lower prices. Yeah, I've been telling people to buy at limit, not at market. Yeah, but the only way to move the price up is market buys. If I was telling people market buy, market buy, market buy, market buy, maybe the price would be 6 cents now or 7 cents now or more, because the only way to move the price up is market buy. So you go onto your Bybit and you say, I want to buy $1,000, and you change it from limit to market and you press buy and you fill your whole position. You don't care about the price. And what you'll see is this candle will form, the price will move up. And if everyone was market buying, then the price will move up and up and up and up and up and up and up. Okay. And the reason why the price is going down is because of market selling, not because of limit orders, market selling. So this isn't a derivatives product. There are no perps. There are no futures. There's only spot. And the only way to move the price, is with market buys, market buying, market buying, market buying. Okay. And what I was saying is that if we had some kind of derivatives product, some kind of perpetuals, then people could also short. Okay. Now, if you're shorting, it's very different to selling spot. Yeah. Because when you're shorting, you're using leverage. And when you're using leverage, you have to put stop losses. You have to put stop losses. And the stop losses are market buys. Market buy. So if you're shorting, so you're selling, but on a leverage product, and let's say you're shorting here. Let me go to a lower time frame. Let's say you're shorting all of this because you're bearish, whatever you're shorting. Yeah. And then you'll have your stop loss, your invalidation will be like this. Maybe above this wick here. Maybe this is your idea of a trade. Maybe you're thinking this. I'm just going to short, and this is my trade. And if somehow the price goes up there, it's above this wick high, and that's my invalidation, right? You're shorting, you're shorting, you're selling, you're selling, you're selling. But you have a very clear invalidation above this wick high, right? Now, if the price doesn't go down, but goes up, and your stop limit is activated, yeah, guess what happens? You close your position with a market buy. Does that make sense? Market buy. So because the shorts are being liquidated, all of a sudden, at the high of these wicks, where people put their stop losses, they're market buying. You have higher buyers. And that's how the price moves up. That's how the price moves up. That's all I was saying. I was saying that if you want the price to move up, yeah, in this kind of market where there's no perpetuals, the only way to achieve it is this kind of price action. Increasing demand, higher lows over an extended period, or a gigantic whale will come in from somewhere and with unbelievable volume will just buy and they don't care, and the price will just go up, right? But they'll be buying market spot, and they'll be buying a lot, and they don't care about the price. Yeah, like those two types of scenarios where whales are just pushing the price up, or you have this kind of behavior with the price where people are just trying to catch the lows and they're selling the highs, and eventually you get some kind of flat top triangle until eventually you have some kind of breakout, right? And where people are just market buying. It's the same thing. It's always the same thing. For the price to go up, you have to market buy. But the difference with this kind of behavior is that people are willing to market buy the lows on spot, whereas with some kind of derivatives product, all you need to do is to liquidate the shorts. So naturally, with a higher time frame chart like this, as we get pivot lows that are descending, then people, if people were shorting this range, then they would bring their stop losses down, and eventually when the price would go up, it would liquidate the shorts, and all of a sudden you have upward pressure of market buys at the highs. So you have higher buyers and then market buying, and that's what pushes the price up. Yeah, and that's all I was saying. And so it's a very easy to understand if you understand it, and it's very difficult to explain if you don't want to learn about how the market works. So I'm not saying shorting TRVL. It's not a futures product. All I'm saying is that if it was, it would be easier to take the price up. Yeah, because most people don't know how to short. Most people don't know why to short, and most people will short badly, and most people who are shorting will get liquidated, and we could easily push the price up. Very easy to push the price up when people are shorting in a bull market. Marve is saying, in a way, the old BTC dropped and new BTC is thriving with steady gain and a steady discount position. Yeah, exactly. So the old BTC had no derivatives, and the new BTC is a much healthier, has much healthier price action, and also with derivatives, all of the traders get involved, and most of the volume in the market is trading volume. Yeah, not long-term buying and hodling. And so until we understand the why of the market, we're never going to take this 10 or $11 million market cap token to the higher values that we want. Never. Because you're just not going to get that much capital come into this token and they're just not going to I can't explain it, but it's just hard to explain the why, but it's just not going to happen. Yeah. So there's other reasons why as well. Like, I'll give you another reason why, and I think this is also a compelling why. People don't like bigger players, bigger entities out there, the whales, the big whales. They don't like having their capital sitting on exchanges. Yeah. But they do want to trade. Yeah. And so if someone has 1 million TRVL, the only way for them to trade 1 million TRVL is to put 1 million TRVL on this exchange, KuCoin, right? And a lot of the big players out there, they don't keep their TRVL on the exchange. Like for me, for example, I'm not a big player, but half of my TRVL is in my wallet, half, 50%. And that's just risk management. What happens if an exchange collapses? And also, I use multiple exchanges as well. I don't just use one exchange. What happens if one of the exchanges goes bankrupt, like FTX? Yeah. So a lot of the big players, they don't like to put all of their BTC on the exchange. And so therefore, what they'll do is they'll use derivatives to trade their whole account, the whole value of their token value, without having the whole value there sitting on the exchange. And then they'll use leverage. Leverage used correctly allows you to reflect the whole value of your account without having the whole value of your account on the exchange. And there's so many benefits of having some kind of derivatives that, unless people are educated in the way the markets work, in the way people behave, then it's an education. It's just impossible to explain to people who just don't understand, right? And so here I am, I'm just trying to educate, and hopefully by the end of this bull market, everyone will be educated, they will begin to understand how the markets work. And it's just an education. It's an education and it's a conversation. I think everyone in the Dow has to understand that if you want higher prices, we need derivatives. We need to enable shorting in this market. Yeah. And if I was to short, most people don't know how to short. Yeah. But if I was going to short, I wouldn't short the lows. That madness. Yeah. What I will be doing is I'll be looking to short, and I wouldn't really be looking to take profit. Yeah. The reason you short is like, I'll give you an example. So look, if the price goes up, let's say this is a key level, key pivot level. Yeah. And if the price goes up, okay, and then and if the price comes back down, then you can short. And what you would do is you short, and then you risk, it's like a swing failure. You risk 1% of your account, or a percentage of your account, but you're not really taking profit, but you'll take some profit. But what that does is it covers your account. It covers your account so that if the price goes down, you don't lose fiat value. Okay. But most people who take short, they're just covering their longs. Yeah. They're not really trying to push the market down. Most people short, like most people short, are also long. Yeah. And so what they do is most people who are shorting are making money on the longs, not on the shorts. Yeah. So they'll have their longs, and as the price comes back down, the same people will be longing. Yeah. So they'll have a big short, they'll short their whole account, and as the price comes back down to key technical levels, they'll be leverage longing on the same account, pushing the price back up, right? And what they don't mind if their short gets liquidated, and that's when you get the squeeze. Most people who short, they don't mind if their shorts get liquidated. It just covers their whole account position, because the reality is that no one knows the top. No one can predict the top. Yeah. And this is going to become really instrumental if and when we get to the highs of the Bitcoin bull market, because eventually we just don't know how high it's going to get. We just don't know. And you could sell, or you could just cover your long with a short. Yeah. And what happens at the highs, if the price gets above the highs, I don't know, this is a bit higher, but okay, whatever. The price gets above the highs and starts making highs, then you're going to start seeing people short. And that's how the price continues going up, because if you short and you can get squeezed and the price goes up. You get short, you get squeezed, the price goes up. And so basically what happens is people are risking like a percentage of their account, because they're risking a percentage, and then they can get squeezed and the price goes up. Because what happens if the price finally does that? Yeah. And they didn't do that. That's the thing you have to understand. The shorts didn't do this. They're just covering their longs. Yeah. This is the market. The market did this. And either they sell and they're out of position, or they short and they cover the position. And then if they get squeezed, they'll lose 1%, but they're still gaining value in the USD value at the highs. Yeah. So again, this is an education. I can't really explain it without more and more explanation, and I probably will explain it continuously so people understand how it works. But fundamentally, most people who are shorting are not trying to short to crash the market. They're just shorting to cover their longs just in case the market turns and goes back down, right? And therefore, they don't lose the USD value. And when those people who aren't losing USD value, what they will do is they'll begin to long back in the lows to take the price back up. Eventually, they'll have a bigger long position and they'll squeeze the shorts, and the price will continue going. And you'll have a short squeeze going back up. They don't, like, shorts don't mind being liquidated. That's my point. Yeah. And so when it comes to like Bitcoin, I was explaining Bitcoin, the price action from yesterday, and I was explaining that I was showing on EXO earlier on that this move up, yeah, and I just it's again, it's an education. But look, do you see this move up yesterday? You've probably never seen this chart before. This is the EXO chart. You can see market orders. This move up, you see open interest going down. This is shorts being liquidated. You see these liquidation bubbles? These are shorts being liquidated. So yesterday's move up in Bitcoin was because of the shorts, basically. It wasn't because of people market longing, because they were longing. It was because the shorts were getting liquidated, and their shorts are market longs, basically. And so this was it. This is how it looks like on EXO chart. The OI is going down, the price is going up, and you're seeing a ton of liquidation bubbles. And if you look at that on Bitcoin and the price action of last night, look, this is what you get. You get these two nice green candles and continuation. Yeah, this is how you get the higher prices with a short squeeze, right? We're not going to get that on TRVL, unfortunately, because we don't have perpetuals, futures products. And that's all I'm arguing for. I'm arguing for that. So Marve is saying Doge is accepted by Twitter with 2 new coins and payments are expected. But it's easy to get caught in fear of missing out on over appreciated positions. Oh, that's interesting. Let me have a look. I'll have a look at that. I'm going to go because I really have to go, unfortunately. I just have to